What's up, everybody? Welcome to the Stocks channel. My name is Cory and today's episode is going to be your daily stock market update. We are still seeing a huge amount of volatility in the stock market and we're still seeing a lot of great trading opportunities. Don't forget, next week is the US election, so we don't expect to see volatility going anywhere anytime soon. Before we jump into the charts, please remember to help me out by smashing that like button. And if you're new, go ahead and subscribe to the channel so you can follow along with all of my daily updates. First up, we're going to go ahead and take a look at the SP500 Spy Etf. So let's go ahead and crack open this chart and see what's going on in the stock market today. Alright, first up, let's check in on our bear bull survey for the week, and we see that we do have the same amount of bullishness as bearishness. Now the historical average for bears is still 30.5, so we still have 5% more bears than typical, and the bullish average is 38%, so we do have a little more room for there to become more bulls. Now the good news about this is that the market is going somewhat neutral. We have about the same amount of bulls as bears, but we still do have more bears than historical average. So that's good news because there's still a lot of cash on the sidelines and there's likely going to be a lot of people stepping in soon and buying the dip. The more the stock market falls, the more attractive it becomes for people on the sidelines who are just waiting to buy in. So keep that in mind, and we don't want to become too bearish while there's a lot of bearish sentiment because we know that these retail investors are typically wrong. When there's more bulls than bears and we see the historical average starting to stretch to the upside, that'll actually make us more bearish. Alright, so we can see that the Spy ETF closed down negative 1.04% at a price target of $326.54. Now you can see we had an extremely volatile day because at one point Spy was trading all the way down around the $322 range. Now remember, this chart is in jeopardy of becoming extremely bearish if we do get a daily lower low and we're still trying to hold up above $321. So with today's close, we passed that criteria and we're still holding up above the 0.236 Fibonacci retracement level at $325. So yeah, this market is bearish, but there is some silver lining because we are holding up above these critical support levels. So we still have the gap above at 333, and that gap will close at a price target of 338. So looking at the price action, we can see we stabilized somewhat because the price action did close around the same level as 2 days ago, right around that $326 level. So when you're seeing a lot of volatility, you really need to pay attention to where the price action is closing. Volatility is going to give you a lot of intraday price swings, but the closing prices are what we care most about, especially when we're analyzing the daily chart. So we see that that price action is really not so bad because it's starting to look like we're building a support level right around $326. So that means we could start building off of this level, and this could start developing a basing pattern for the bulls to build off of. Now don't get me wrong, we're still in a very bearish trend, and you can see how bearish this trend is with that 5 EMA trading way below all of the other moving averages, and the 13 EMA is getting ready to cross below the 50 EMA. So we do have bearish price action and bearish trending, but it is good news to see that the bulls are able to hold up and build a support level right around 326, which is just right above our 0.236 Fibonacci retracement level at 325. Now the other good news is if we go over to a 1 hour chart, we can see in the last 1 hour of trading, we did get a significant increase of volume and a huge bullish candle. Now if you go to a 5-minute chart, you can see a lot of that buying and a lot of that price action actually happened in the last few minutes of the market open. So that is somewhat good news going into the weekend and going into next week. But don't forget, we still have a bearish trend and bearish price action, and we still have a lot of volatility in this market. So we want to continue to trade this market, and we're not looking for long-term hold positions right now. We're just trying to trade with what the market gives us, and we're trying to take advantage of the volatility. You can see we're closing below the lower Bollinger Band again. So as long as we continue to close below the lower Bollinger Band, it's likely we could see a short-term bounce starting next week. Now this trend is becoming more bearish, and you can see that the 20 simple moving average has rolled over and it's starting to slope negative. So we can see that we're definitely in a bearish trend, and we want to be defensive when we're in a bearish trend, and we want to look for buying opportunities off support. So the number one support levels to watch right now are the 325 level and the $321 level. Now if we start breaking and closing below 321, this chart is going to become extremely bearish, and we're going to become very defensive, and we really want to wait because the floor could fall out and we could see much lower prices if we start to close below 321. Now above, we still have resistance levels at $331, which is where that gap was closed, and we do have the resistance trend line, which is going to decrease day over day. So that resistance trend line and that gap above are somewhere around $333 over the next week. If we start to break into that gap and we start getting extreme bull price action and going up into that gap, we could close that gap at 338 and break this resistance trend line. So like I said, the bulls are building a base right around 326, and only time will tell what they're going to do with that price level. So watch 326, 325, they're basically the same support level. And if we start breaking below that, you need to start watching out for 321. Next up is the Nasdaq 100, and this is the QQQ ETF. And we see the Nasdaq 100 also closing just below the lower Bollinger Band, closing down negative 2.54% today. So if you're a member of the Stocks Channel Discord, you know this was a buying opportunity for us today. And if you're interested in following the Stocks Channel's trades, just look in the description below and click the link and join and become a member. We're doing a lot of trading while volatility is high, so now's a great time to be part of the Discord server. So looking at the Nasdaq's price action, we do have bearish price action, and you can see that the bearish trend is picking up momentum, and that 20 simple moving average has rolled over and it's beginning to head negative. We do have the gap above, and that gap will close at a price target of 281, and the bottom of that gap is right around 279. We still have the resistance trend line, which is right around that same gap level, so we could still get a bounce and a test of those resistance levels very quickly. Remember, when volatility is high, we could see huge price swings to the upside just as equally as huge price swings to the downside. There's probably a lot of people trying to short this market, and eventually they will get caught on the wrong side of the trade and they will get short squeezed. Now on the downside, we do have our support at 261, which is the previous support level. So a close below 261 will be an extreme bearish sign, and we don't want to see that if we're going to be bullish in the long term. We want to see a higher low formed here because we already have a lower high. So lower highs and lower lows are the sign of a bear market, so we want to maintain a higher low, and then will be more of a consolidation wedge. So you can see we have a support level and a downward trending resistance trend line, so we're still somewhat in a consolidation and correction pattern right now. So we're going to take this volatility and be a trader in this time, and we're trying to maximize the volatility by catching the swings from the downside to the upside. We're in and out quickly, scalping that profit quickly, and we're not being greedy. It's critical to manage your risk in times like this, and don't get caught holding a position because you're trying to maximize your gain. Just take the profit, profit is profit, take the bird in the hand and move on and get ready for your next trade. Volatility is a huge problem for rookie traders because they get greedy and they hold on to positions way longer than they should. You can see we're in extreme bearishness, and you could try to short this market, but I don't suggest it because shorting is a difficult game and you're gonna eventually get caught on the wrong side of that trade and get trapped. Don't forget, the market wants to go higher and markets like to go higher, and they're biased to the upside. Now we can also see on the Nasdaq 100, we're trading right around that 0.236 Fibonacci retracement level, right around $270. We did close just below that level today, but it's still within that area that we could find support here because we're also trading below the lower Bollinger Band. So we could still see technical balances from being oversold, and we did see a nice buy near the end of the day. You can see the last 1 hour, we had a huge spike in buying and we had a nice bullish candle to end the day. So on the Nasdaq 100, watch out for the critical support level at 261 and watch out for the gap above at 279, and that gap will close at 281. Next up is the Dow Jones Industrial. This is the DIA ETF, and we can see that the Dow Jones is holding up above the gap close support right around 264. Intraday we were below that support level, but like I said earlier, closing prices matter more. So we're closing above that support level and right around the 0.236 Fibonacci retracement level at 266. So if the Dow bulls can hold this support, we could start heading higher to close the gap at 272 and 273. That gap closure could be a huge resistance level, and we could start trading in a sideways pattern from here on out because the US elections coming up, there could still remain a lot of volatility for weeks to come. So on the Dow Jones, your critical support level is 264, and if we start closing below that, we could go all the way down to the 0.382 Fibonacci retracement level at $250. Next up is the VIX, which is our fear indicator, and as we know, volatility is here because we have a high VIX. The VIX is trading at 38, which is a very volatile time, and we're going to continue to see 3 to 4% price swings as long as the volatility is trading at these high valuations. So volatility went up 1.14% today, and we're still trading above that resistance trend line. So as long as the VIX remains above 34.7, we're going to remain in a volatile market, and we're going to remain traders, and we want to take advantage of the volatility while it's here. As a trader, volatility is our friend because it allows us to get in and out of positions quickly for a huge gain. So watch the VIX. If it starts breaking and closing below 34.7, That'll be a sign that the market's probably losing its fear and it's ready to go higher. Next up is Apple stock, and we do call Apple our market moving stock because of how heavily weighted it is in ETFs. So Apple closing down negative 5.6% today absolutely helped with the lower stock prices, and we can see Apple is closing below the lower Bollinger Band and below the 0.618 Fibonacci retracement level. So the critical support for Apple is going to be right around the previous support at $104, and if we close below that, it's likely we're going to close the gap below all the way down at $96. So Apple's in a bearish trend and we have bearish price action. So it's likely we're going to continue to see bounces off of the lows and then continuation of the downtrend until we see something start reversing. Next up is Tesla stock, and unfortunately for the Tesla bulls, there's no good news today. The price action closed well below the 0.618 Fibonacci retracement and we are below the lower Bollinger Band. So we could see a short-term bounce from here, but the price action and the trends are picking up with bearish momentum, and it's likely that the Tesla bears are back and ready to start shorting this stock. So I wouldn't be in a hurry to jump in Tesla at this point. Let's wait and let it find support and let it build a base and start heading higher before we start buying into Tesla. Next up is gold, and we see gold did find support at the 1860s and we did get a confirmation bounce today. So this could be a good buying opportunity to start scaling into gold. But if gold does break below 1860, our next support level is right around 1809. So looking at the price action and the trend on gold, we have bearish price action and bearish trending, so we don't want to become too bullish. If we can hold up above this support level, that's our first sign that the bulls are buying in. And then we want to wait for the 5 EMA to cross back above the 13 so we know that the trend is on our side on the bullish direction. So if you're buying into gold now, don't forget to set a stop loss below support so that if we do start breaking down, you don't get caught holding the bag and you can buy at the next support level lower. Next up is the US dollar, and we're looking at DXY and we see the dollar went absolutely nowhere today. So the dollar is taking some time to cool off after this monster run up that it had, and we can see that the bullish trend is getting stronger. The 20 simple moving average looks neutral right now because it's trading flat and the price action is closing above all the moving averages. So remember, a strong dollar could mean that the stock market could continue to correct. We've seen the inverse relationship between the dollar and the stock market, so a strong dollar will most likely mean a weak stock market. Now we'll keep our eye on it and we'll keep watching for that inverse relationship. But right now, if the dollar continues to look bullish, that could be bad news for the stocks. Next up is Bitcoin, and we see the Bitcoin bulls are still 100% fully in control and the price action remains closing above the 5 EMA. We're still seeing really good volume and we're still seeing really good trending and price action. So I'm looking for Bitcoin to finish its consolidation right around this low $13,000 level soon, and it should start breaking through this resistance level and heading higher. Next up is financials, and we still have bearish price action and bearish trending, but we are holding up above and forming a new lower high. So there is some silver lining in there, but overall we have bearish price action and bearish trending on financials, and we need to start seeing this trend reverse, and we want to start breaking back above this support trend line and break into the channel that we were trading in before and start getting ready to form a new higher high. So financials are consolidating right around this level and they're starting to build a base above a higher high, which is good news. Next up is the industrials, and we see industrials holding up above their support level and just hanging on and trying not to form a lower low. So the industrials are bearish price action and bearish trending, but we are holding up above support. If this support level breaks at $74, we could go back down and close the gap at $72. Next up is healthcare, and we see the same exact thing holding up above critical support levels. So it's time for the bulls to start stepping in, because if we get that lower low, it's going to be bad news for the bulls and good news for the bears. So to summarize this market, you can see there's bearish price action and bearish trending all over the place. So you don't want to get overly bullish right now and you want to protect your money. So I suggest if you're not sure what to do, you probably are better off just waiting on the sidelines and staying cash until this volatility goes away. If you know how to manage risk and you know how to trade, take advantage of this volatility and try to make some trades. Just remember to not get greedy, take your profits while you can, and get ready for the next trade. There's no reason to get greedy in this market and try to hold a trade longer than you need to. The volatility is very real and the VIX is very elevated. So we want to get in and get out quickly. So on the S&P 500, look for these critical support levels to hold up. And if we can start bouncing off this level, look for the critical resistances at $331 and $333. If the bulls can start breaking these resistance levels and the volatility in the VIX can start going away, we could start to grind higher in this market yet again. But as long as the volatility is here, don't expect to see the stock market head higher. We're going to get a lot of chop, and we're more likely going to continue trending downward until this volatility is gone. So manage your risk very well and be very disciplined in your trading. And if you're not sure what to do, just go ahead and sit on the sidelines for a few more weeks and wait it out. Please remember to help me out by smashing that like button. And if you're new to the channel and want to follow along with all of my daily updates, go ahead and smash that subscribe button. Thanks for watching, everybody. Good luck out there. Have a great weekend. And as always, I will see you in the next episode.